With the recent drop in the Federal Reserve rates, I get a lot of questions about, oh, are my rates now going to drop like a quarter of a point? Or why don't I see rates going down and all of that? Well, to kind of clarify that a little bit, this past rate cut, the market had already responded to what they were anticipating going to happen. So that's why as a mortgage rate, you don't really see as much movement. The other thing that correlates with that is mortgage rates are not directly affected by the Federal Reserve. HELOC rates are, credit card rates are, car payment loans or car loan rates are directly affected by what the Federal Reserve does. Mortgage rates, on the other hand, go by what the market perceives and what the market does. So if the market responds favorably to what the Federal Reserve has done, then the rates will then come down a little bit and kind of change and tick like that. So that's why you don't see a direct effect. Now, if the Federal Reserve drops the rates again, and maybe twice like they're thinking about doing before the end of the year, then we're going to see some probably drops in the rate, maybe an eighth, maybe a quarter, maybe as high as a half. But again, it's not a direct correlation. So if the Federal Reserve drops their rate by 0.25, that doesn't mean a 6% rate is going to drop to 5.75. What it means is if the market and all responds well to what it's done, then the rate will probably drop about an eighth, maybe a quarter, but they also could go up a little bit. Again, it all depends on how the market responds to what the Federal Reserve cutting rates does. So again, call me if you have questions. We can definitely, tell you what we think, what's going on, and kind of the correlation between the two. It's not rate for rate the way you might think it is. So give me a call. Dawn Hall, Van Dyke Mortgage. Would love to talk to you about anything. Would love to help you get a loan. 239-789-7561. Your lender for life.